Like we're live. Okay, cool. Hey guys, my name's Hayden Crabtree. I'm the author of best-selling book Skip the Flip. And today I'm extremely excited to be joined by a good friend, a financial mastermind, a black belt. How many time black belt are you, Damion?
I've got four.
Four-time black belt, Damion Lupo. And today I want to get Damion on to talk because he's advised me. I've referred people to Damion to talk about what he specializes in. I want to hear a little bit about your background, but my main goal and takeaway for the call today, Damion, is to educate people on your retirement system, which is the EQRP. And I want to tell people why right now is really the best time to get involved. And the government, the benefits that the government has thrown out there, kind of with all this COVID mess, of how that's allowed people to actually dig into the retirement accounts that traditionally hasn't been available to people. I know we've talked a little bit about that. So I want to turn it over to you, Damion. Again, Damion is a good friend of mine. We met over a year ago. He's helped me out on some personal stuff. He's a real estate investor himself, which is why I really want you guys to listen to Damion, because he's not just a guy who talks about doing this and advises people. He's somebody who actually implemented this in his own life, and he helps people implement this on a daily basis. And again, me and Damion are very similar in the fact that we don't believe in, just handing over your wealth in your life to somebody on Wall Street, but rather taking control of your own life. And that's what his podcast, Financial Underdogs, is all about. So, Damion, why don't you get into a little bit about your background, who you are? We can take it from there.
Yeah, thanks for having me. And all you guys, thanks for being here to expand your minds. Hopefully we'll blow a couple of your minds, explode with new information. My background, I've been a professional investor for the last 20 years. And it was basically because I just kept getting thrown out of college. Hayden actually graduated, I think, right? You graduated?
I did, barely.
Yeah, so that didn't work for me because I started a bookstore and they said, no, you've put the bookstore on campus out of business. You can't be here. And it never really worked. So I just left and eventually started up businesses. I've started 50 plus businesses and have been doing real estate investing since the late 90s. And it basically just became who I am. So I don't really do conventional wisdom. I tend to look at the conventional wisdom like Wall Street stuff. And I just sort of say, this is a scam. And now, because of 20 years of working on this in this space, I can tell you why it's a scam. And things like Hayden's book that he talks about, Skip the Flip, that he's giving you nuggets of wisdom. And that's what I love about him and what people like Hayden, because they're giving you guys reality, not something that they studied in an ivory tower, and that's the same perspective I have. Real world, going out there, seeing things that are real, doing things that are real, and then giving you all what my experience is versus just regurgitating crap. And so the thing that we're going to talk about today is retirement accounts, how to use those, how to invest using those, how to access funds that are really stuck in those things. Most people don't realize you can actually do a lot, especially now because Congress did some crazy stuff a few months ago, crazier than normal. They're pretty crazy in general.
They're always crazy, right?
Yeah, they're always, this is just like exceptionally crazy because normally they don't have multi-trillion-dollar bonus spending bills, and they did. And when they did that, it opened up some resources that most people have never had a chance to tap into, which is called a 401k or IRA. And you guys can do things like invest in multifamily or metals or all sorts of really cool stuff. So I figured we could talk about that and share what's going on.
100%. And I don't have anything on my schedule the rest of the day, so we can make this last as long, but I really wanted this to be more conversational than, like school lesson. And I also want to get the people here involved on the call, asking questions too, because my hopes is that somebody on this call has retirement funds and that we're going to teach them something today that they didn't know was possible, that they didn't know existed, and show them a strategy that they can take that, call you up after this, take action on that, and go out and change their life for the better. So that's my hope. I want you to get into what a retirement account is. I think most people know that, kind of why retirement accounts exist, what the traditional format is, and how we can actually flip the script and kind of take control of those things we traditionally don't have control of.
So we're not going to flip the house. We're going to flip the script.
We're going to flip the script on the traditional route. There you go.
All right. Well, many of you probably have retirement accounts or people that do, but let's just assume you have one either from an old employer or maybe a current employer. And typically those are just stuck in mutual funds. We're kind of told it's one of 5 things that you invest in: mutual fund A, B, C, D, or E. And in reality, we have options to do all sorts of stuff with those. We can invest, once you have control of it, you can invest in almost anything. And typically you'd have to wait until you leave a job to have control. The thing that we're going to specifically talk about is something called the EQRP, which is a type of qualified plan. Qualified plan just means it's part of the tax code. It's a retirement account that gives you tax benefits. There's a question whether or not you really want to be in control of your money, or whether you want to just smoke a bunch of hopium your whole life and hope it works out. And that's
What's hopium, man? I don't know that anybody here's ever smoked any hopium. Tell me what that is.
That's called investing in mutual funds for the long term.
Yeah, you're just smoking on something, hoping it'll work, right?
It's a Wall Street doobie. Like, that's just what it is.
Okay.
So unfortunately, we're trained to smoke that crap, and the truth is, we've got other options. Doing things where you're actually in control of your money, and that's what the self-directed space is for retirement accounts. Most of the money that people have is in retirement accounts, like in terms of our equity, our net worth. For most people, it's in a 401k or an IRA, and then their house. But you're not going to eat your house, and you do need to eat something. So it tends to be the retirement account, which is why we want to make sure people have control of it.
So traditionally, people go through their lives and what is probably most popular these days, and people don't realize it's actually meant not to be the sole thing, but a lot of people's sole and only retirement these days is a 401k, right? And they go through their work and they think it's this great deal because their employer is going to contribute. Oh, for every dollar I put in, the employer is going to contribute X additional dollars. And everyone thinks it's this quote, free money, right? But at the end of the day, you might have an option of what you can invest in. Your employer may say, do you want to invest in a high growth? You want to invest in a conservative? Where do you want to invest? But at the end of the day, you're not getting that full and complete control of, hey, today I want to allocate this much of my retirement money into real estate. Today I want to allocate this much into XYZ stock, particularly. Today I want to allocate into this business. Today I want to allocate into, gold or silver. A lot of people are just like, almost set it up on, let's say, auto pay. They auto invest. It's like every time they get their paycheck, they don't even see that money, just goes in this 401k. And they think that whenever they open their eyes in, 30, 20, however many years they get until they get to retirement, there's just going to be this huge sum of money that they can live off of forever. That's not really the way the system was designed to work. The 401ks were designed to be supplementary to other sources of retirement funds, such as Social Security and pensions and all of that, correct? Is that?
Yeah, actually, and the whole point of the reason the 401ks came up and IRAs were built back in 1973 was because companies had pensions that they were getting buried with, these legacy costs. Like companies like Ford and GM that have all these pensions they're paying, that stuff buries a company, and they ultimately couldn't pay for it, and they realized they weren't going to be able to. So they said, let's change the rules. Let's just give some people some quote unquote matching funds, and then we're off the hook for paying for them until they die. And this was really to protect the companies. It was to protect the companies from liquidity. And so it really screwed the people, because you think about this, Hayden, you go and you do your work, you do it for 20, 30, 40 years. And then all of a sudden you're supposed to be an investor. You're supposed to wake up at 55, 60 years old and be smart enough to invest. Well, you don't have any training or anything. And so the system was really set up to screw people. And so unfortunately it is what it is, but it's time for us to all become investors. And that's the choice now. It's either, okay, I'm going to trade stocks, or I'm going to actually go and do things I can control. And we have a choice now.
Yeah, no doubt. So, and that's what we're going to talk about, is the choice. But most people think that 401ks are good for them, but they don't actually realize that the 401ks were meant to, almost like parents kicking their 18-year-old kid out of the house, like, get off my bill. That's almost what 401ks were created for, to say, look, we can't support you anymore. You need to learn how to support yourself. And then that grew the 401k industry, which made Wall Street's eyes just go huge. And they realized what a massive opportunity they had to take people who didn't know how to invest, pour them into these accounts that they didn't know how to manage their own money, and charge these huge fees for essentially making a couple trades a year. Am I right?
That's it. And usually it's all on autopilot. They just fee you to death. I mean, in reality, 401ks where we hear these numbers like the stock market makes 7 to 9% a year. And that's the average over the last 30 or 40 years, or for 100 years, whatever. But when you actually see behind the curtain and you look at all the fees, the average you're making is 2 to 3 to 4%. That's it. And so you're really
what's
not
inflation?
It's going to be more than you're making. I mean, the bottom line is this thing is a scam. So the free money that you're getting, it's trapping money that you actually made. And so you go, well, it's free money. Like they're matching dollar for dollar. Yeah, but your dollar that you made is still in there and it's still being trapped. It's still being feed, and you can't control that to invest in things you can actually grow.
Right. So, and most people hear this and they understand, they're cognizant of the fact that they need to go out and take control of their retirement. And where a lot of people go to after, let's call it 30 minutes of research, they go, oh, let's go get a self-directed IRA because this sounds like the end all be all and tax-free haven, blah, 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 blah. And I even, I opened a self-directed IRA before I knew about the QRP. And I was uneducated. I thought that the self-directed IRA, because I'd been told from a mentor of mine, hey, self-directed IRAs are the way to go. Don't have 401ks, don't have any other thing. Get yourself a self-directed IRA. And I just, without really knowing and going any further, I said, okay, that's what I'll do. Now I quit contributing to it because I don't really believe in that anymore. But at the same time, I think it holds its purpose. But now we know, and no one's talking about this. That's what I wanted to do. I want to bring awareness to this. No one's talking about the fact that the QRP has all the benefits of a self-directed IRA and essentially none of the downfalls. Is that right?
It does. It has all sorts of benefits.
Okay.
And yeah, so there are major differences in these different things. And unfortunately, when you Google yourself into confusion, you
Mm-hmm.
tend to not, you find whatever you're looking for. And that's what's really important about this conversation, that you're going to have real truth that you're going to understand.
Sure. So whenever I got into self-directed RAs, I essentially realized that the money that I could put in up front, as long as I could grow it, I would essentially never get taxed on that money. And that was a big appeal, but also an appeal to me was that I could put that money into a real estate venture, right? I could go out and if I wanted to flip a house, which I don't want to flip a house, but if I did want to, then I could go out and I could use that self-directed money and all the proceeds and profits from that would be tax free. But then I got to thinking, and at the time I was like, wait a second, I'm 20. At that time, I was 22 years old. And I go, I'm not going to be able to touch this money till I'm, 60? I go, this is horrible. I'm not doing this anymore. But for those people who, you know, are already there, already have 50, 100, 200, 500, $1 million in a 401k. Now we've given them the opportunity, the ability to take back the control of their money. No matter, does it matter? And this is one thing I want to ask, does it matter where they are in their life cycle? If they're still working for a company and they think they're going to work there for the next 10 years, do they need to wait? Can they go ahead and switch it over today? How does that work?
So there's some options, and specifically because Congress changed the rules in March of 2020, now you can pull part of your money out and actually do take control of it. If you're most of your money, depending on how much you have, you can pull up to $100,000 out of your 401k right now, regardless of what age you are, because of the CARES Act, and then start self-controlling, self-directing it. So that, other than that, the rest of the money is basically going to be there in that mutual fund that your employer has with their plan until you leave. So you've got some access. Sometimes,
Mhm.
Hayden, people realize, wow, I actually can retire early. I didn't realize I could control this. And here's the thing, it doesn't matter how old you are. There are ways to get your money out of your retirement account and then not pay tax and then get to live on that at any age tax free. Like, there's some really interesting things because of all the different tax code that happened in the last 30 months where
Mhm.
you can take these resources. And a lot of times you don't realize it's like trapped money and you think, oh, it's 10 or 20 years out. You actually might be able to be financially free in the next 12 months.
Yeah, so people may say, "Oh, I can't access that money because there's going to be this penalty associated with it," but they may not realize, "Hey, if I pull that money, pay that penalty, and reinvest at just say 8%, I'm gonna be way better off." Right? A lot of people just aren't doing the math. Is that what I'm hearing you say?
They're not doing the math, and really truly there's no reason to pay a penalty. There are ways to convert and to pull money out without any penalty, and oftentimes we can do it without any tax. So just think about what I'm saying. Your retirement money that's supposed to be stuck until you're 60, there are ways in the tax code now to convert it and pull it out and be able to invest it tax free, penalty free, and then spend the money even if you're not 59 and a half or older. I mean,
Mhm.
this is big stuff.
So people are probably shutting their brains off right now,
Yeah,
and
probably.
because they're not listening to you. Repeat it again. There are ways to access your retirement account money right now, not pay any penalty tax on it. Is that correct?
Yeah, the because of the tax reform acts that have happened over the last 30 months, we have something called bonus depreciation. We have things where you can convert money into Roth, where you can pull money out of Roth. Like, if you're just going, I don't even keeping track. Here's the bottom line with this. You have whatever money you have in a retirement account that you're sitting there thinking, I can't touch this until forever away. The reality is you can actually probably touch it a lot sooner in the next 12 months if you
Mhm.
wanted to, tax free, penalty free.
That's awesome. That's amazing. So, would you walk through? You can, just go through and talk through if you want to write out the benefits, whatever you want to do. walk us through the benefits of switching, say, your 401k or even your self-directed IRA, because you can switch either. You can switch a 401k to a QRP, and you can switch a self-directed to a QRP. Is that right?
Yeah. So really, there's two things. Let's assume that you have a 401k at work. Well, right now you can pull up to $100,000 out of that and get it into your EQRP self-directed retirement account. And so that's a way to get it out of mutual funds into almost anything else. So
Mm-hmm.
that's the first big benefit. Then what is it? The benefit is you don't have to be in mutual funds. You can do mutual funds and or real estate, anything else. The other one is the IRAs. So if you've got money in an IRA, the huge problem is you don't really totally have control because there's a custodian. And so you're like, well, yeah, but my custodian lets me do what I want to do, and I can buy real estate. The problem with that is if you ever buy real estate, typically real estate has debt. And here's the problem. If you buy real estate with an IRA, you're going to pay up to 37% tax because of UBIT. So you would never want to pay an extra 30. It's a tax shelter that you're paying taxes in. So how do you get out of that? You move your IRA over to an EQRP. When you move it over, you're now exempt from that tax. And not only are you exempt from the tax, but you've got control. You've got a checkbook with your money, and you can do all sorts of other things that you can't even do with an IRA. So no taxes and getting out of mutual funds and into whatever you want to invest in. Those are the two big benefits and the two big control pieces.
So let me walk through real quick to make sure that everyone's getting this. Let's say my life before I even went to a self-directed IRA and I'd been contributing money to a 401k. Before that, essentially my paycheck was probably automated. An amount that I got paid went directly into a 401k. I didn't have to think about it. I really didn't even know what was going on unless I logged in probably once a month to see an update of what my portfolio was at. I had no control over what was going on with it. And I just I was essentially a passive investor there, and Wall Street or mutual funds were charging me fees that I probably didn't even know I was paying. And that's essentially what my retirement plan was. And then we get to step over to a self-directed IRA, which is essentially where we say, okay, I want to take control of my money, and I'm going to do that through a self-directed IRA. In that process, I could decide what I wanted to invest in. But in between me and those investments, if I'm here and the house I want to buy is here, then there's a person in the middle of that is essentially controlling that process, and they're called the custodian. And the custodian had to essentially approve your investment before you could actually invest in something. In addition to that, if I were to invest in a real estate project, say that say I wanted to go invest in someone's real estate syndication and they were going to use debt on that. Let's say that they did use debt, and let's say I doubled my money. I'm going to pay a percentage of tax on that. So the self-directed IRA isn't truly tax-free, because if I'm partnering with debt on a project, again, partnering with debt, then I'm going to have to pay taxes on that money. Is that the before and after of what a 401k to a self-directed IRA looks like?
Yep. The zombie apocalypse. That's it.
Okay. And then let's say that if essentially if I think that gold and silver are going to go up and I want to hedge against fiat currencies and get out of the dollar and into gold or silver, could I do that through a self-directed IRA?
So you can't do that and hold the metals. And that's a big differentiator between IRAs and EQRPs. Because IRAs require somebody else to hold it, you cannot take possession of it. With an EQRP, you can actually take physical possession of gold and silver. And when Hayden said you're stuck in fiat or you don't want to have fiat is just basically this paper with dead presidents that's not backed by anything.
It's
And
monopoly money.
printing it. It's monopoly money, and it's being printed out of thin air into oblivion, which means that is going to become worthless. What's not is gold and silver.
Yep.
And so you have an option to use retirement money to actually buy physical metals, which is a huge opportunity.
So in a self-directed, this sounds great, right? I can invest in gold and silver, but wait a second, I'm not actually the person that gets to have it. How does that make any sense? If you know what I mean? Like if oh yes, self-directed IRAs, you can invest in gold and silver. Let's just have someone over here, your custodian, hold it. But what if I need that and they're closed because of COVID? Do I get my gold and silver?
Good luck.
Yeah, right. So what you're telling me, but the before and after from a self-directed IRA to a QRP is that I can buy gold and silver and it can get shipped to me and I can put it in my safe. Is that right? And
That's
if I
it.
need it, I can actually go out and use it.
Yeah, and the reason this is because with an EQRP, when you run a when you run a qualified plan, you're the trustee. You get to choose where the metals go, where the assets are held. It's up to you to choose. There's no custodian. That's actually you. That's why there's a big difference, and you actually call the shots.
And again, back to the passive, say I invested in someone else's project. Essentially, I went from investing in Wall Street through a 401k. I went from investing in their fund to, let's say I wanted to get out of stocks. Those guys are charging me a lot of fees. I want to get into something with more clarity, with more visibility, more transparency. Let's say I wanted to invest, again, passively, let's call it passively, into a real estate syndication, call it an apartment building that I can go and look at and walk the grounds and see how it's doing, to see what I actually own a piece of. You're telling me if they were to use debt on that and I were to do a QRP, then I'd get 100% of the profits. I wouldn't have to share any of that because of the partnering up with the bank and the taxes on that?
You get to leverage it all you want. All that profit stays there, no tax.
No tax. Okay, cool. So the benefits mainly are that if you buy gold and silver, you can hold it yourself and you don't have to get anyone's approval. And if you were to go out and buy a piece of real estate, you don't need some middle party, some fiduciary telling you you can actually invest in this project, and you don't actually have to pay any taxes on it.
It's huge. I mean, those are the main drivers
Yeah.
that make IRAs all of a sudden very, very suspect.
Yeah. So, and in addition, I mean, I know you can contribute, what is it, $6,000 now to an IRA. Is that the same for the QRP?
It's actually 10 times more. So it's up
10
to
times.
57,000.
Okay.
So yeah, 10 times, which makes it an actual viable option. I mean, an IRA is not going to get you rich, even if you invest for 20 years. I mean, that's 100 grand. You're just
And you
going
earn
to
a
be old.
50% return.
Yeah.
You'd have nothing, right?
Now you got to be able to get enough seed capital in there to be able to do something. If you're putting $6,000 in, I mean, a decade later, you've got 60 grand. You're not anywhere close to retirement. You got to get a lot more money in there.
So let's say that we have a doctor or a lawyer or an engineer on the line who, let's say they make 200 grand a year. Let's say they live off of 70 or 80 and they just have all this excess money. What does it mean to somebody in that position to actually be able to put $55,000 into the retirement account? What kind of difference are they going to see, over their life?
Well, I mean, you just think about putting 10 times more in. So if you over 20 years, you put money into an IRA and it's $120,000 and you grow it and you get your 10% or whatever, you might have $400,000. You're literally taking that and turning it into $4 million if you use the right retirement account. And here's the other thing. A lot of times people, and our friend of ours, Tom Wheelwright, talks about this. And he said, why would you use retirement accounts where you're growing things, and instead of paying capital gains, when you pull the money out, it's actual ordinary income? Mm-hmm. Totally good point. And here's how what's happening is when you put money into a mutual fund or real estate inside of a retirement account, and then you pull it out down the road, it's ordinary income. Well, that sucks if it's real estate that you bought, because normally it would be a capital gain. And so you say, well, I don't want to do that. And I agree. Bad idea. Here's the good idea. Get your retirement account into a Roth state, which is after tax. And then when you pull the money out, your tax rate's zero. That is the ultimate. Right now, that is an option. I don't think that option is going to be around forever. So, I mean, just think about that. Tax rate being zero when you spend the money. How do you get better than that? I mean, I guess the government can send you a check in addition, but that's the goal. That should be the goal, is going to zero. And that's where this is so powerful, because you can convert all of your money to Roth inside the EQRP.
Gotcha. Okay. And I just want to go over again, I know we talked at the beginning of this about Congress being a little bit crazy. So specifically, what has happened since COVID hit that is a big benefit and people not only need to be aware of, but need to be like looking at this as the opportunity of a lifetime and taking action on it?
So back in March of 2020, Congress passed the CARES Act. And what they did is they said, if you've got a retirement account, any type of a retirement account, we're going to allow you to take up to $100,000 out. And then you have two options. One, you can pay taxes on it over the next 3 years. Or two, you can keep it and then put it into a qualified plan within 3 years. So what that did is it gave people the option to pull money out of, whether it was an IRA or it was a 401k at work, and actually can push that into another retirement account that they could direct. That was the first thing they did. The second thing they said, if you got a 401k or a thrift savings plan, which is a federal government type of retirement account, we're going to let you borrow up to $100,000 or all your money, whichever's less, and you've got 6 years to pay it back, no payments for a year. One of the big things is the thrift savings plan. Millions of people have these things because this is military, government, and they've never been able to be really touched until people left, until they retired. Now you've got access to up to $200,000 out of it if you've been impacted by coronavirus, COVID-19. And that's a massive opportunity to get your money in your hands to be able to start working with it. And these are limited. The loan is only until September. So we're talking 2 months and then it expires. The disbursements till the end of the year. So you can do it. I mean, these are very limited, and it's possible they get changed again. Congress is about to do another stimulus bill in July, August of 2020 that could potentially change these things. So super time sensitive right now.
So again, I know with say the PPP or the EIDL, there were certain things you could spend that money on. Are there any limitations if I go out and I pull that 100K out? I know that one thing you could not do with those other forms of stimulus is you could not improve real property and you could not buy real property with those funds. What are the limitations on pulling these out of the accounts?
There are no limitations. Whatever you want to do, that money goes to you and it's up to you. If you take a disbursement and you say, okay, I'm going to spend this and pay taxes, okay, do it. If you want to roll it over into a self-directed retirement account like the EQRP, great. Now start investing. The loan, you can do absolutely. You can buy a boat. You can buy a ticket to Mars up with Elon, whatever you want to do. It's really up to you.
So you're telling me I could take this disbursement and I could go out, and there are distressed sellers in the market right now. I could go out and buy a distressed piece of property whenever I need to pay that loan back. How long until I need to pay that loan back?
So if you do a disbursement, you've got 3 years to do whatever you want to do and then give it back. A loan, you've got 6 years, no payments for the first year.
So what you're telling me is I could go out, I could buy a piece of property, I could improve that piece of property. Within 2 years, I could do a full refinance on that property, get all the money back, pay it back. I paid no tax consequences. And now outside of my retirement account, I have a piece of cash flow real estate with no money in it.
Dude, it's a great idea.
So why is the media not telling this? Why are they focused on all the negative stuff? Why aren't they telling us about the opportunity that's right here in front of us?
I mean, it's pretty simple to me. The media is basically driven by marketing, and the marketing is big Wall Street, big pharma, big banks. And so that's what the information is. I mean, we're getting information. They're not going to say, hey, take your money out of Wall Street and go do something that's actually going to make you free. They're going to say, just hang on. They're not going to tell you this stuff.
So again, guys, I want to iterate. If you have money in your retirement account right now, and is that whether it's a 401k, self-directed IRA, EQRP, no matter what vehicle it's in, we can pull 100K out right now?
Yeah, any retirement account, it qualifies for that 100,000. If you have an employer retirement account, they simply have to allow it. So they're not required by law. What the law did is said it's up to the employers. Thrift savings plans, if you're a federal government employee, this is an option. It's opening this week so that you can actually do this. And many employers, depending on the employer, you just have to call and say, hey, are you guys allowing us to pull $100,000 out from the CARES Act? And that's the question.
Gotcha. See, and that's another thing, that if you're, beholden to Wall Street, if you're beholden to the man, to your employer, one thing you need to realize is they still control you, even with great things like this. And I'm sure a lot of employers are going to let people get their money out because they want to help people and it's not going to hurt the employer. But one thing you need to realize is that you need to get control of your money as quick as possible. You may think it's your money if it's in that 401k, but if you listen to what Damion just said, it really is not your money right now. Okay. You have to get permission. And you need to do whatever it takes to get that money that you think is yours into your actual control, to buy things like real estate, to buy real assets. Because Damion, briefly touched on it earlier, but they're printing trillions and trillions and trillions of dollars. In short term, we've seen a little bit of deflation because people are trying to keep the sales going. But I guarantee you guys, Damion, how long do you think it is before the huge inflation hits?
You're going to see it in things like food and such already. But across the board, it's inevitable. Could it be next year? Yeah. Could it be 5 years? Because a lot of people it's crazy. People are saving money right now. And so we're seeing savings surge because people are getting nervous. They tend to not be spending when they're nervous. So but is it coming? Absolutely. Could we go deflationary and then inflationary? Of course. Because when you have a stall out in the economy, that's very deflationary.
Yeah, no doubt. Well, cool. I love this. What I would really, really like to do is open it up to the floor. We've got a decent amount of people on here, and anyone who's got any specific retirement account questions, listen, you're getting free access to Damion. Normally he charges $1,000 an hour, but I let him get on here and he's going to answer y'all's questions for free. So anyone who wants to take yourself off of mute, come out, ask a question, and we're gonna help you out. Is that cool with you, Damion? If we ask some questions? Okay. Anybody on here, whether you want to talk about whether, you know, somebody, you know, has a retirement account and they want to be a real estate investor and they don't even realize they can use their 401k to be a real estate investor, whether you've got your own money, no matter what it may be, let's hop on, ask some live questions, because that's where the power comes. Don't be embarrassed about asking a question. Don't be shy. This is something where me and Damion want to put this together to help you guys make progress. Me and Damion, we could be doing other things right now. We don't need to be on here. We're on here for you guys to help you out.
You can also type a question if it's something you just want to throw in there in the chat box.
Sure.
Feel free to do that.
Hi, my name's Lou Visco. I'm on the Zoom call from California.
Hey, Lou.
Can you hear me?
Yeah,
Hi.
you're good.
Hey, so I'm interested in what you're talking about. My retirement stuff is all in a Roth IRA and a SEP IRA. I've got about 220,000. And so I'm looking for a strategy where I want to be able to generate cash flow that I can live on today. I'm 49. I don't want to wait till I'm 59 and a half. So is there a strategy where I can put it into a EQRP and I'll be able to live off the income that I'm generating from any property that I invest in?
So I'm going to talk you out of an EQRP right now. This is like literally the opposite of somebody that's trying to just do their own thing to make money. But in your case, with a Roth IRA, one, it can't be moved to an EQRP. But here's what you could do instead. One idea. Mm-hmm. And this is a great thing to run by a good tax strategist, because I am neither an attorney or an accountant, but I just have a lot of intelligence around investing. You could take all the money you've put into the Roth IRA that's considered basis. You can pull that out anytime. So whatever the number that is, let's say that's $150,000. You could pull that out tax-free, penalty-free. It's not in your personal account. The other $70,000, because of the disbursement, because of CARES Act, you could pull the $70,000 out, and that's dispersed. There's not any penalty for doing that. So you've got access potentially to all that money. If you wanted to now invest that in things like real estate or whatever you wanted to do, you could generate current income, because at 49, you're not going to be able to have money in a retirement account that you're using and spending. But once it's out, you could do that. So this would be a way to get access to that. And Hayden and I can tell you, there are ways to take $220,000 and be financially free inside of 24 months all day long. I mean, it is just, there's a formula for doing it. So
unless you like yachts, we can't help you get a yacht. But
that is not part of the financial freedom formula. No,
I don't necessarily need a yacht, but to be work optional would be nice. And out of this whole COVID situation, because I got furloughed and I'm living on like unemployment, and basically, so that's like, with the $600 bonus and all that, it's like $4,200 a month, and I still have money left over. So my number's pretty low as far as my basics, you know?
Yeah.
It right now, honestly, the thing that, and people will ask Hayden and I both this all the time, what should I invest in? You know, they're trying to figure it out. You should be investing in what you're doing right now, the financial literacy and financial education, because you've got enough capital right now. If you're smart about it, you're done.
You make a difference for sure. I mean, I started at zero and reached financial freedom in 3 years. So, you know, starting with 200K plus, what'd you say, 220?
Yeah.
So Damion, how does Lou here actually, like, who does he call? What does he say in order to get that money out?
So the first thing to do is, if you find out how much basis you have, how much you've contributed, and that's the amount you can pull out immediately, no tax, no penalties, goes in your personal account. The other amount, because you were furloughed, you are for sure you're qualified, and so you can pull up to $100,000. That's the balance, and take that and put that into your own account. So you've got you just figure out your basis, and then if you wanted to use this strategy, you just call the IRA custodian, tell them what you're doing.
So well, some of those are like with different mutual fund companies, so I guess I need to like consolidate all that somewhere. But awesome, thank you so much.
Get out of those mutual funds, Lou.
Yeah, well, I mean, I definitely got out of the stock market. I want to, not be in that casino anymore. So
that's exactly what it is. It's a casino. So yeah, anyone who thinks that the stock market's doing fine, go look at the correlation between how the stock market is rebounded versus how much money they printed. It's a 1-to-1 correlation. So that's not what we want. Okay. Anybody else got some questions? Thanks, Lou. Appreciate that.
Thank you.
Yep. All right, we got a message over here in the chat. John says, we can pull money out of the 401k and into a QRP, but going forward, since I'm still a W-2, I'd still need to contribute to the company 401k, correct?
So you do not have to contribute to a company 401k. You just because you have one doesn't mean you have to do anything. So when you pull money out because of the disbursement, like if you're still working there, it's going to go into your personal account. Once it's there, you have up to 3 years to be able to put it into another retirement account. It could go back to the old one, or it could go into an IRA. I think the best place, and Hayden would agree, is the EQRP. So once it's there, you're controlling it. And going forward, it's totally up to you. Most people think Congress changed the rules a few years ago and changed it so that there was an automatic opt-in, so that when you go to a job, they automatically opt you in for a 401k. Here's why: because it increased the contributions by 15% overnight. And so the system is set up for Wall Street to win, not you guys.
That's a psychological game, man. I mean, I think they did a study behind it. And they found out that like the number of people who, when given the decision to say, do I want to contribute or not? The number was like less than 40% or something. And then they found out that if, we just essentially sign people up in auto pay, don't even make them think about it, then the number goes to like 90% or something like that, isn't it? Because that's the number of people who don't believe in themselves and their ability to invest appropriately. And they just want to be, again, like Damion says, smoke the hopium. They're just hoping that something good is going to happen. So that's a game they play on us. I read that, and it makes me angry that happens. But
and it's also it's a game that's played where the pitch is, this is good because more people are gonna save for the future and they're gonna invest. No, it was good for Wall Street. It didn't mean that it just, that's who it was good for.
All Wall Street cares about, right? Correct me if I'm wrong, but all they care about is how much money are we controlling, because we're going to earn fees off that money. The more money we control, the more money we're going to make. It doesn't matter how well that money performs. We're getting paid if it goes down or if it goes up. We don't really care how that money performs. All we care is how much money can we get on our books to say that we manage.
It's called assets under management, AUM. That's exactly the game. It's how much, what you just said, how much can we get under our control? And then we get to fee it forever until death do we part.
401k is the primary vehicle to get money onto Wall Street. And guys, what we're talking about right now is so important because we want you to take the money off of Wall Street. Those guys are fine. They're whatever. They're, honestly, they're smart. You can't blame them for wanting to make money, but we have to realize that it's not our job to put food on their table. It's our job to put food on our table and take care of us over the long term. So does anybody else have any more questions about this? I know Damion's time is precious.
This is John. Can I follow up on my chat question?
Sure.
So I guess the overall thing was, so right now I put money into the 401k. I get the tax, whatever the tax deduction at the end, it talks off my taxable income. So I guess that's kind of where my thought was going, is if going forward, still having, until I can make this QRP work to some advantage to where it's giving me tax deductions other ways, investing in real estate, whatever, I'm still needing some vehicle to maintain my, tax advantage of knocking my taxable income down. I guess it's kind of where my thought process was in the question. If that makes any sense.
Yeah, and one of the strategies may be I don't know if you're married or not, but if there's something called a real estate professional designation, and if you have that, either you or a spouse has it, there's a way to reduce your taxes. And the default right now is people use 401ks because they're running out of other options. And so you have to kind of push yourself outside of that box and think about the bigger picture. The problem with just contributing to 401ks is that you're stuck in a box, and it's a box on a roller coaster. And so it's just a question, do you want to pay now or do you want to pay later? You just have to look at the bigger picture because it's a trap door. And unfortunately, most people are falling into it.
Fair enough. Thank you.
Damion, correct me if I'm wrong here, but if I wanted to say continue investing into a mutual fund, if for whatever reason I thought that was my best plan going forward, could I not take that money, put it in the QRP, and invest in the same exact mutual fund, but yet give myself more control?
Yeah, you have all the options, and then all the actual options. With the way the tax code is set up, it's really funny. It says, okay, here are all the things you can do. And what most plans 401ks do is they cut up and they say, okay, here are the 7 things that you can actually do. And they don't give you all the options. And EQRP just gives you all the options, including the mutual funds. So there's no good reason to keep your money stuck in a 401k. It's literally the dumbest thing that we could do, because you're limiting yourself unless you just don't trust yourself. But why would you be on this call right now if you didn't trust yourself a little bit?
Yeah, no kidding. All right, who else has got some specific questions? We've got a great one from Lou and John.
Hey, this is Jeff Walsh in Chicago.
What's up, Jeff?
Hey, Jeff.
Hey, how are you guys? Thanks for your time.
Absolutely.
So I just wanted to elaborate a little bit on what you stated, Damion. You said real estate professional. So I've done some research into that, and then you also asked if you had a spouse or anyone else.
Yeah.
So I think the direction you were going is, hey, you're full-time W-2, right? There's no way you could say you're working, 1,040 hours to claim that status. So could you have your wife or significant other do that, right, and hold that status? Is that the direction you were going with that?
Yeah, and there are rules. So you've done the research on this, and this is where you have a tax strategist, because sometimes you're able to become a real estate professional and have another job. It just depends on how many hours and how much income is coming from the real estate activities. And then if you had a spouse, that person could be a real estate professional, and then that, what their activities do could offset active income. So it's a very powerful thing. A lot of these rules are probably going to go away, you guys. I mean, they're in the next couple of years. If Congress and the presidency change, watch a lot of these rules go away. We're going to turn into a socialist environment and just say goodbye. Bonus depreciation, cost segregation, like all these things. So timing is incredibly important. Whatever you're going to do, get your butt up going, because like these things may be gone.
Right. Okay. No, that's great. And I've back in June, I liquidated a couple of rentals that I had, hoping to make a move to multifamily. Haven't done it. Sitting on cash. Threw some into some stocks right now just to play with. I'm not in a situation where I need to borrow against my 401k, fortunately, but I just wanted to listen in, right? Knowledge is power. So whatever I can do, you guys.
Damion, tell Jeff real quick what he should do with gold and silver and how he can leverage that to buy that in debt to buy properties rather than just sitting on cash and getting crushed.
Well, I mean, there's a lot of things you can do. I mean, if you have cash, instead of having cash, I mean, here's an interesting thing. Bank of America, monster bank, never says anything about gold. Oh, gold's bad. Just put your money here and buy a CD. They actually said they expect gold to be $3,000 an ounce by the end of next year. So why do they say that? Because they know how much cash is being printed. So one option everybody has is to take cash, convert it into precious metals. And then if you say, well, I actually want to go buy real estate or do something else, great. You can borrow against your metals. You can actually borrow up to 75, 80% of your metals and go buy real estate. So then you keep your gold and silver, and you also can go buy real estate. So you get the benefit of both things. There's a lot more out there than what's in Money Magazine. And they never tell you these things because it's not in their best interest. But you have a lot of options right now. And cash is probably the worst option because it's being printed faster than you could ever save it.
Sure. Yeah. Again, well, my whole goal was to make a purchase, right? To get back into real estate, multifamily, just because of the write-offs. You lose your write-offs, right? We're capped with between your personal income and property taxes, right? Not having any type of real estate investments it kills the average person.
Well, let me say something too about this. A lot of times people are afraid of selling something. Like you sold some stuff and we're afraid to sell because we don't want to pay capital gains, or we force ourselves into another deal. And there's nothing wrong with selling and paying capital gains and being on the sidelines. So if you do nothing, that's not necessarily worse than doing a bad deal. So I think a lot of times people go, well, if I'm paying taxes, it's bad. Watch capital gains go to 30 or 40%. Just watch, just watch what happens. So I think what you did is probably very smart.
Yeah, no doubt. And I mean, Jeff, one thing I've seen is that like when looking at properties, when the whole COVID crisis hit, I fully expected there to be a ton of distressed properties on the market right now. And we've just seen it not happen because of how much stimulus money has been printed. In my personal opinion, it's just been prolonged. It's not that it's not going to happen. It's just waiting to happen. But the question is, as we know, this wall of inflation is coming and we sit on cash, how long is it going to take for those distressed properties and opportunities to start popping up? And that's where Damion taught me the strategy of convert all of your spare cash, anything that you don't need, in gold and silver. And that way, that as inflation comes and as you wait on those distressed deals, the actual value and purchasing power goes up and the deals and the real estate is starting to go down. And then you can actually continue to ride that positive wave, that uptrend of gold and silver prices, and still hold and use that to buy the real estate as you just go to someone who wants to borrow at 5 or 6%, who will lend to you at 5 or 6%. And then you're saying your gold is going up at 10, 12% a year and you're borrowing at 5 or 6%. You're double positive leverage there if you use that money to go out and buy real estate.
Okay. No, that's good to know. I'll have to look into my options for, looking into metals.
Yeah.
It's something I've ever thought about exploring, to be honest.
If you guys want information about metals, go to mygoldadvisor.com. It's the precious metals company we've had for almost 50 years, and download the report, get a copy of the book, the book I wrote, just so you're exposed to this stuff. I mean, more than anything, Hayden and I are spending our time teaching, and that's what we're doing, empowering you guys to do whatever's best for you. So go to My Gold Advisor and just get a copy of the report and the book and learn. I mean, it'll benefit you more than you can imagine if you actually understand what real money is.
Damion, will you type that in the chat box so everyone can see the actual URL?
Mm-hmm. I think Julie had a question too. Julie, let's see. Is there any advantage of taking the $100,000 out of your 401k? Yeah, it's out of 401k jail. So if you can get your money out and you control it, I mean, just think about what you can do. You can do your mutual funds if you want, but now forever you have control. So you can buy metals, you can invest in real estate. Bottom line is, it's no longer behind the bars.
So Julie, kind of like Damion said, he talked about a strategy earlier where you take that out, and I helped him with the strategy of where you take that 100K out, you go out and you buy a real piece of property with it, improve that piece of property, and that money is due back within 3 years, or you can just hold it forever and pay your penalty of whatever. You got to do the math to figure out, if I go out and reinvest it at this, which way am I better off? You guys really need to do the math here. But you could go out, buy that piece of real property, fix it up, do a refi to get all that money back, continue to hold the property and pay your 401k back. And then essentially you just got a free piece of property, and you leverage your 401k and the opportunity that's available right now to do that. So that's probably one of the biggest opportunities in my head right now of people who can actually do that. Or Damion, couldn't you take 100K out, plop it all in gold and wait for it to go up? And then when it rises by 60% in, what Bank of America says is a year to a year and a half, then you just sell, 40% of that gold and you keep all the profit outside of that.
Yeah. And I think Bank of America is low. I mean, the amount of money that's being printed, there was $18 trillion as of 2 weeks ago that had been printed in the last 2.5 months globally. And so here's another thing. You can take the $100,000 out, go buy a piece of property. I mean, this is kind of wild stuff, but you could go buy a piece of property and then put the money back in. And so you're like, okay, I got my property and I've got the money. And then now you've got control of it, convert it to Roth, and then use your property to give yourself the depreciation that offsets the conversion, and then pull all the money out and keep it tax-free.
Because your 401k doesn't get any tax benefits.
Your 401k doesn't get any tax benefits. So basically what I just said is there's a way to get your $100,000 out, buy real estate, get the $100,000 converted to Roth, not pay taxes, and then pull all that money out and have it forever free. So this is tax-deferred money that y'all have. And there's a way now for you to be able to get that money out of that thing without even paying taxes. I mean, the opportunities to do this are epic. And there's no secret maneuver that's going to, hurt you in this. It's literally just the tax code that's set up it's a perfect storm is what's happened right now.
It may sound complex, but this is getting back to the basics, right? It's using locked away money in order to buy prosperous, cash flow positive assets and put it into your life. It's the basics, right? We're just talking about a strategy of how do I access capital that I already have but can't get to do the basics.
That's it.
Yeah.
It's untrapping your wealth. I mean, it's sitting there. It's amazing to me how often people are sitting on their, like Lou, you're sitting on assets and we don't even realize that it's just like our freedom. We're holding the key. We're shackling ourselves and wait, the key is right in front of us. So it's a choice.
Yep. It looks like, Julie's got another question. Julie, if you want to take yourself off mute and have a conversation about it real quick, we can answer your specific question. We can do that.
Perfect. Thanks so much. Thank you for clarifying all of that. That really helped. I guess my question was, if you take the money out, say I buy a property with that, you talked about converting it to a Roth. However, if I still don't pay that 100K back, am I penalized then, or how does that work?
Well, so part of the tax code, because all these different things that have happened in the last 30 months, when you buy property, you can use cost segregation. It's basically bonus depreciation. And so that just kind of follows you until you have something. If you can't use it, it goes forward. And meaning a year from now, let's say you convert your money to Roth a year from now, potentially you could take that depreciation and use it to offset the taxes from the Roth. So what I'm suggesting is that we just use one to help do the other, and you end up on the other side of this without any taxes at all. And there's no penalty when you convert to Roth. Once you convert anything to Roth, you can pull that money out. It's called basis. So like if you contribute to a Roth IRA or Roth 401k, you can always pull that money out that you contributed. When you convert something from deferred to Roth, it's now considered basis. It's the same thing, and you could always pull basis out. So once you've converted something to Roth, it's now basis and there's no penalty. And if you want to, you can pull it out. So it's a strategy right now, given the current code, that allows you to access your money.
Damion, listen, guys, I'm learning stuff on here. Damion, whenever you do that, do you ever have to pay that basis back, or how does that work?
Mm-mm. When you pull your basis out, this isn't a loan. This is you pulling your money out. So one of the options, and this may not be around for more than 3 or 4 more years, but like if you get your retirement account built up, and it's deferred money, and then in 2023 you say, okay, I'm going to convert it to Roth, and I'm 45 or 50 years old.
Mm-hmm.
I convert it to Roth and I buy real estate with that money. Guess what? No taxes, no penalties, tax-free income for life, because you have depreciation offsetting it. I mean, if you think about what I just said, I'm saying taking deferred income that you've never paid taxes on and basically ending up with real estate, and you've never paid taxes, and now you get to live off that income.
Pays you every month.
It pays you every month, and you don't have to wait until you're 60. I mean, this is not going to stick around, because AOC and her friends, they are not going to let the rich people, and they're going to think anybody that has real estate is rich. Oh, you're a landlord, you're a rich person, we got to go beat you up. So, I mean, the reality is this is available now. It will not be available in 5 years. There's no way.
5 years. That's the key. Okay. Julie, did that answer your question?
Yes. Thank you so much.
All
You're
right.
welcome.
Anybody else? We've heard from Julie, John, Jeff, Lou. Who else is on here? Mr. Jones, Toby, Michael, Mike, Troy. Anybody else got any questions?
Mr. Jones has to ask a question because he's the only one with a J that hasn't asked. No, go ahead. Whoever's.
Hey, Damion, can you hear me all right?
Oh,
yeah.
We got 2 questions here. We'll let Mr. Jones go first. We'll get to you in a sec, Troy.
Good.
My question is a little different. I have $30,000 ready to invest. I have it through an HELOC. My question is, how do you start? Do you go through the NMLS? And I guess I should clarify what type of investing I'm doing. I would like to do rental investing. So looking for a single family rental to start off, or maybe a 2-family. My issue is getting out and finding, how do you get started with that? Do you go to the NMLS? Do you find someone who is selling real estate and they sell to you, and then you pay them a portion of the commission that they make, the 6%? That's where I'm stuck.
Hayden has the perfect answer. I think you should model what Hayden. No, seriously, Hayden, what did you do?
I mean, Mr. Jones, have you heard my story?
No, I'm reading your book right now.
There you go.
I listened to you on Keith Weinhold a couple weeks ago, so I got your book, and I'm in the process of reading it right now.
So you heard my story of how I worked for a mentor for free for over a year to learn what the hell is this crazy world of real estate investing. Because when you're out there and you're doing it, you're like, wait a second, is this good or is this bad? Is this the deal of a lifetime, or am I about to lose my ass on this deal? You like literally have no idea. And I could let Damion talk for an hour about losing your ass on deals, but I mean,
thanks, Ed.
Well, it's all lessons learned. I'll send you a video. Shoot me an email after this, Hayden@HaydenCrabtree.com. I'll shoot you an email. I did a YouTube video and a webinar just like this a couple months ago where I talked about how to find deals. But the number one thing you need to do, 1, is read my book. And then 2, you need to understand, how do I underwrite and financially model a property? Because listen, Mr. Jones, if you get hooked up with a realtor that brings you deals, they don't care about you. They just want their commission. You, whether it's a wholesaler, whether it's somebody from Facebook, whatever it may be, you need to learn and build the confidence and skills in yourself to be able to underwrite properties so that you are confident that this is a deal that you want to do. So I think it all starts with education. if you got $30,000 to play with, I would not just jump in and listen to somebody else. I would begin with self-education. And then, a good strategy is probably trying to find another investor in your area and tell them, hey, I got $20,000 that I want to invest and partner with you on a deal. Can we work out some sort of joint venture so you can actually see the full process through? That's kind of my 2 cents. But why don't we take this conversation off of this, and you and I can talk further about that.
Okay. Hayden Crabtree at
Hayden at HaydenCrabtree.com.
Okay.
Yeah, or shoot me a message on Facebook or whatever.
I'm following you on Instagram, so I can follow. I can hit you up on Instagram.
Just shoot me a DM. Yeah, that's fine.
Okay. All right. Thank you. Appreciate it.
Yes, sir. All right, Troy, did you have a question?
Yeah, I did. How you guys doing?
Good, Troy.
Well,
It's good to see you.
Thanks for being here.
Hey, Damion, I was emailing you a month or so ago, but one little clarification on that. If you convert your EQRP over to a Roth, obviously you got to pay the taxes, unless, like you were just saying, it sounds like if you can do the depreciation, you're still paying the taxes. It's just coming from the depreciation from a property if you have that ability, correct?
Well, yeah. I mean, depreciation's paying it. Depreciation is a phantom expense. So we love depreciation paying anything.
And then to do that, you have to be a real estate professional with not instead of.
Yeah, you or your spouse. And depreciation is just one thing. There's a lot of other things. There was a limit where you could only do $500,000 in terms of offsets. Like you could only convert $500,000 per year of a retirement account to Roth. And now there's an unlimited amount that you can convert and offset with things like bonus depreciation. So right now, and that happened because of the CARES Act. So we're in this funky space where if you don't have a tax strategist, Troy to everybody, like that's really like a Provision or one of these higher end firms, like top smart strategists, man, you're in trouble because there's just like, you don't have to pay taxes. It's an option. Yeah. And you just have to know all the rules because they all work together, but it's pretty complex trying to figure it all out.
People's biggest mental block in that though, Damion, is like, oh, I don't want to pay the accountant $2,000. It's like you pay them $2,000 and they save you $50,000. Like you're not paying them anything. They're working for free, Yeah.
Well, I mean, yeah, absolutely.
We did just talk to Provision based on you and a couple other people, but I haven't hired them yet. So I definitely need some help. Anyway, so once I convert this over to a Roth, I believe you told me I still can't, even though it's inside the QRP, it's a Roth inside the QRP, correct?
Yeah. The Roth is a part of your EQRP, correct?
But I still can't transfer an outside EQRP Roth into that EQRP. Is that correct?
You can't move a Roth IRA into the EQRP. It's the one thing.
Even the Roth side of it.
Roth IRA is just this one thing the IRS doesn't let you move anywhere, except it has to always live as a Roth IRA.
Yeah. Okay. Yeah, I was hoping I could convert it in the EQRP to a Roth and then bring some more money into it that was already in a Roth. But
the way to maneuver that, one option would be take whatever you've put into a Roth IRA, you can pull the basis out, and then if you can somehow contribute that back into a Roth EQRP, that's one way to do it, assuming that you had income that would allow you to do it. But feel free to connect with me and we can talk about strategy and see if there's a way to do it.
Yeah, appreciate it. Thank you, guys.
If you pull it out of the Roth, you may not even want to put it back into a QRP.
Also a thing. Here's one of the things too that I'll say before we finish up. Having a Roth account, and a lot of people like Hayden have said this, and they go, I don't believe in these things in retirement accounts, and I get that. Here's the one thing that we know for sure: the tax laws will change, and what I believe is going to happen. A lot of very smart people agree with me that the real estate loopholes, if you will, all these things are going to change not favorably when we have a new administration. And so one of the things that you guys can really do is make sure you have a Roth account that protects you, because even if that went away, it'll likely be grandfathered in going forward where you would keep it. So just having it, even if you had $5 or $10 or $50,000 in that Roth account, really helps you to hedge against whatever Congress does to change the rules around real estate. Because I bet they're coming. I don't think we're going to be happy about them.
It almost can't get better than it is currently.
I do. Yeah. It's enough said.
I mean, seriously, with bonus depreciation, you can write off almost 100% of a property's purchase price in year one. How does it get better than that?
It's the bubble of goodness. Like we're at the top. I don't see this thing getting better. So the question is, how do you hedge yourself on the other direction? Joe Biden talked about his tax cut plans. that he's just going to wipe them out, all the Trump tax cuts and the changes, so that we're not competitive globally. And you think about that, we're talking about doubling of tax rates. I mean, what does that do to real estate? It's going to crush it.
Yeah.
So
no doubt.
Buckle up, guys.
All right. Well, hey, we've
Thank
been on
you.
here for almost
Appreciate
an
it.
hour. If one more person wants to ask Damion a question, I know he's got to go, but we'll see if we can get one more on here.
Was that just a tease, Toby? You're just like say hi, or like put your face out there.
I'm just seeing if it was working.
All right,
Thanks,
Toby,
Al.
you're up. Ask a question. You got the last one.
So like I have 100 grand in my traditional IRA, and I have a Roth that I've been contributing to. Like what would be your suggestion for me? I don't really qualify for the COVID. Haven't really been affected really.
Well, the good news is, in your case, if you have a traditional IRA, you can convert that to an EQRP, and at that point, you're able to use that for real estate and not get taxed. This has nothing to do with COVID. It just has your ability to convert. It's called it's a rollover of an IRA, not your Roth IRA, just your traditional one. But that 100 grand,
Right.
if you want to have control of it, you can buy gold, you can buy real estate with debt. There is literally no reason for you not to do that at this point.
Okay. Great. Thank you.
Do you invest right now, Toby, in real estate?
No, sir.
Okay.
Really my first time. I'm reading your book, and it's really my first time listening.
Okay, gotcha. Well, I mean, like we told Mr. Jones here, is get learned up on that as quick as you can, because I mean, real estate is, especially when you're using debt, guys. It's and as you read in my book, real estate, cash flow real estate paired with debt when inflation occurs, you literally can't be in a better position, and that's what's coming. Okay, that inflation is what's coming. So get yourself in a position where you've got some debt on cash flow real estate as soon as you can.
Gotcha. Thank you.
Yep.
Right, Damion?
That's it. And make sure you have some gold. Don't forget the gold.
Or silver.
Yeah, get some metals, get some real money. It has been money. It's gonna help protect you, because the politicians aren't getting smarter, you guys.
Do y'all do crypto, or do y'all not touch that?
I think everybody should have some crypto, because we're going digital. And so I'm not saying go and convert your net worth to it. I'm saying you should have some, so you know what's going on, because we are going in that direction. The paper is going away.
Gotcha.
Don't invest in some Bark coin or something like that. Just invest.
Just get some Bitcoin or
just get some
Ethereum.
Bitcoin if you're going to do it.
Yeah.
And again, nothing that Damion and I have said here is professional investing advice, but this is just kind of how our brains operate.
Yeah.
So Damion, do you, if these guys want to learn more about it, what's the best way to do it other than, guys, Damion has a killer podcast called Financial Underdogs, and all he does is spill the truth about what's going on. I highly, highly recommend you go listen to that. But Damion, if they want to learn more about QRP, gold or metal, how do they do it?
Best thing to do is text the word EQRP to 72,000. I put it in the chat box. Just text that, and it'll send you a report. It's a 15-page report on what we've talked about, the CARES Act. And it'll also give you a chance, if you want the physical book, I'll FedEx a copy of that out to you. So just text EQRP to 72,000, and we'll get you hooked up with some intel. And I'm happy to chat with you and set up a time as well.
What way can they reach out to you or find you if they don't know how to text EQRP to 72?
If you can't text EQRP, you cannot. That means you can't dial. No, seriously. If EQRP.co, you can set up an appointment to connect with me. That's the easiest way to go. But I want to make sure you're educated. So please get the report, like Hayden's book. Start with that. Educate yourselves. We're going to do a lot more together if you have the baseline, and that way we can go on to more advanced strategy and things. So feel free to set up the appointment to talk with us anytime you want.
Guys, if you found this helpful, I'm going to post this on YouTube after this. I think that at least everybody in this group probably knows 5 other people that want to take control of their financial lives, that have money in retirement accounts, that literally have zero idea that any of this exists. So I want you guys to do me and Damion and yourself and your friend a favor. And I want you to, once this YouTube video comes out, I want you to email, message, text, whatever the link is, to somebody who needs to hear this. Because again, we didn't spend our time just to talk to the 13 people on this call. We spent this to help as many people as possible realize. And as you listen to us, you realize, holy cow, there is so many things I could do to take control. And that's really the power in what we want. So I don't have anything else. Damion, if you got anything else other than that, we're going to log off.
I appreciate you guys being here. Thanks for being here. Hopefully you'll reach out and let me know how we can help you. But thanks again for your time.
Thank you so much.
See you guys.
Much.
Thank you.
Thank you very much.
Thank y'all.
Yeah.